Good afternoon, friends. As our Prime Minister said, new year, new law, new Bharat. We start with our fresh series on GST today at the behest of our Honorable President Dr. Shyam Agarwal ji. Friends, after a long and arduous journey, GST bills were finally passed by the Parliament last night. After the Rajya Sabha cleared the bills without any amendments, the wait is finally over for the long impending indirect tax regime, that is the goods and services tax, with passing of 4 supplementary bills of GST, that is the central GST bill, the integrated GST bill, union territory GST bill, GST compensation to states bill. The bills will finally move to the President for assent, which will rapidly usher the new regime, most likely from July 1st, 2017. To take us through the basics of GST today, we have with us Mr. Vinod Jain. He is a member of all the 3 institutes, that is the company secretaries, chartered accountants as well as the cost accountants. He has been a former council member for the Institute of Chartered Accountants of India for almost 12 years. He has also served as a regional council member for ICSI and is presently director in Coal India. He is member of High Empowered Committee of Government of India for Direct Tax Simplification and has also worked closely with the Government of India for simplification of GST. Having experience of more than 37 years in taxation, we look forward to his address. Sir, we request you.
Thank you, Mr. Jain. I think I welcome all of you to this program, the starting program for the webcast in relation to GST. Friends, we will be talking about GST concepts. I am sure most of you might already be familiar with many of the concepts, but the manner in which this GST bill has gone, goods and services tax law, over several years it has actually travelled a long journey, starting from the year 2004, when it was actually recommended by the Kelkar committee that there should be goods and services tax, which could be a national tax, and all the taxes, all the indirect taxes can be subsumed, that means merged into this act. From 2004 onwards, I think the government started working on it, and I think in 2009 and 2010 also sufficient work was done. But consensus could not be reached on the model on which the GST should come. How the center and state relationship can be balanced, how can the states permit the center to collect all taxes in one tax and then distribute to states, or can the states collect and distribute to centers? There are several questions. We have seen GST as a law is there already in so many countries across the world, including Italy, China, Japan, Singapore, South Africa, Australia, New Zealand, Germany, Russia, Mexico, not in USA. United States of America is one major exception where we have seen that GST as a law is not there. GST, because US is a large federal government and states as well as center levy multiple taxes. In India, we had similar challenge as United States of America had, but I think I must congratulate both Prime Minister Modi as well as Finance Minister Shri Arun Jaitley for a mammoth effort for bringing out consensus among all the states. The most important journey started with, I can say the winning journey started with convincing the entire parliament, including the Lok Sabha as well as the Rajya Sabha, to pass the Constitution Amendment Bill unanimously. I think this is probably one of the very few legislations which is going to impact the entire country. Almost every single citizen of this country is going to get impacted by this law, and such a law getting passed unanimously in the parliament, first as the Constitution Amendment Bill itself, because the manner in which the structuring has been done by the current Finance Minister under his leadership, under the guidance of the Prime Minister, it is actually something so unique that once the GST law start operating in India, it will become a model for the world as a whole. When we started the journey, I remember, as a long practicing chartered accountant and a company secretary, we have been watching this development very closely, and several models have come. Initially the talk was there should be one single tax, there should be one single authority we should collect, but slowly and slowly people realized difficulties in that, and now the way the consensus has emerged, I am now coming to that, how the consensus emerged. The consensus emerged that there will be two parallel taxes which will be part of the GST. One is going to the central GST, which is going to the central government. Another is going to be the state GST, the proceeds of which is going to go to the respective state. Now, how this is going to really function, the whole thing we have to really see in what manner we are really going to go further. It is very clear that this will be one nation, one tax. The only exception which is being talked about now is Jammu and Kashmir, because the bills which have been passed by the parliament, all the 4 bills which my learned colleague Mr. Jain has just spoken to you, they do not encompass to Jammu and Kashmir as a state. But I am sure, because I am also watching the development with Jammu and Kashmir, that they are also passing parallelly similar law in Jammu and Kashmir also, so that they are not left out. Because if Jammu and Kashmir is left out, they are the state who are going to really suffer in the whole process. So now once the parliament has passed both the laws, that means Lok Sabha has passed few days ago, and now yesterday Rajya Sabha also passed without any amendment. This major milestone became possible because of GST Council. GST Council is a very unique concept which I want all of you to understand, because that is not going to play the role only earlier, but in future also GST Council is going to have a very, very important role. It is a constitutional council created under the constitutional amendment under the Constitution of India, and the council is headed by the Finance Minister of Government of India, the State Finance Minister in charge of Government of India in charge of Revenue is also be a member, and beside 2 of them from the central government. Every single state has one nominee on the GST Council, and all the nominees of GST Council are expected to be the level of the person of the Finance Minister of the respective state, but the states have been given liberty to nominate any person even other than the Finance Minister. So we call this GST Council like a mini parliament consisting of more than 30 persons, and anything and everything whatever GST Council have seen, we have seen they have not done with majority, they have done with consensus. I think that is the most remarkable part, that there has been a debate. The debate, I am told, I was the other day in a breakfast session with the Finance Minister, he mentioned that in none of the cases they have passed the law or the regulations or the details on the basis of majority. They have ensured that the consensus prevailed. There are differences of opinion. There are a large number of different views which comes across the country from different walks of life, and then they are debated threadbare. If you would have been seeing, almost every week there has been meeting of the GST Council, and GST Council one after another considering each and every ticklish issue one by one and coming to a consensus, and that is the biggest congratulations to the Finance Minister as head of the team of the GST Council, that he could ensure a complete consensus in the GST Council. And if we are able to move further, we are sure that this bill is going to, and this bill has improved in this process so significantly. We remember that originally a GST model law was announced by the government, then a revised model law also came, and now the third, the final most, which was originally the bill, now going to become the act very shortly, as soon as the President of India gives his assent. Immediately thereafter it will become an act. So this journey we have seen, there are large number of changes. Everybody who is concerned in the country, whether they are traders, whether they are manufacturers, whether they are service providers, or whether they are chartered accountants, they are company secretaries, they are cost accountants, lawyers or other professionals, or even logistic people who are actually feeling very concerned about it, everybody's view have been considered by the GST Council openly. The people who are taking a decision, the team headed by the members CBEC and one Mr. Upendra Gupta, I must actually, Ram Tiraj ji and Mr. Upendra Gupta, I must actually congratulate them that they actually worked so hard along with the GST Council to ensure that the views of the profession, I think our own profession was heard very clearly, and it was actually implemented in most of the places. Almost all suggestions were considered and appropriately wherever possible have been implemented in the law. Now coming to the GST law. What is this law? what is the concept? I think we will try and learn through this webinar session. And one nation, one indirect tax, that means it is trying to subsume a large number of indirect taxes. Which are the indirect taxes it is going to subsume? Let us talk about it. We have currently taxes at the central government level, we have taxes at the state government level. We will be talking only of the major taxes, although there are large number of minor taxes which are also getting subsumed. Anything which has to do with goods and services, either at the state level or at the central level, when a tax is connected with that, it is proposed to be subsumed into this goods and services tax, which is going to be really commencing from 1st July 2017, as is all likelihood. So, we see at the central level the most important two major laws, that is the central excise duty as well as the service tax. Both are going to be submerged into the goods and services tax. Similarly, on the state side, the most important law, that is VAT, value added tax, which was earlier replaced from the sales tax, is going to be subsumed into this law. Beside this law, these three laws, the laws relating to entertainment, law relating to purchase tax, law relating to luxury tax, octroi, entry tax, all that at the state level will get submerged into it. I have already talked about central excise duty, the additional excise duty, the additional custom duty, as well as the SAD, you can say the special duty which is given on import, the countervailing duty which you pay on import, and various kind of other cesses etc. are going to really get subsumed into GST. So, this is going to be one single law, one single act in which we will have one single law in which we are going to have state level taxes as well as central level taxes getting submerged into one. Now, how it is going to work? That is what everybody is actually eager to really understand. How can there will be one tax? How the division will be done? So, the government has very rightly divided it into two portions. Everybody who will be issuing an invoice, the person who is going to be the registered, earlier we used to call the registered dealer, now the registered person. So, the registered person will be issuing, when he issue invoice, he will be actually charging two taxes. One is the central GST, that is CGST, and SGST, that is the state GST, when he is selling the goods within the particular state. That means, if you are a person sitting in Haryana and you are suppose sitting in Gurgaon, you want to sell something in Hisar or in Palwal or any other part of Haryana, then you will charge these two taxes. That is the Haryana level, Haryana state goods and services tax, and central tax, which is going to be central goods and services tax. So, this will be 50% of the total rate which is going to be charged. We have several rates which have been announced, starting from 5%, going up to 18% and maybe more also. Now, the bill has actually given the powers to the government, the state governments as well as the central governments through the GST council to go up to 20% each. That means, total tax can be even up to 40%, but that 40% will happen only in extreme circumstances on very demerit goods or very highly luxurious goods. I think they have only kept it immediately. There is no possibility of tax going beyond 28%, but they have kept a leeway to take it up to 40%. I think that is where that whatever there is a tax charge, that will be equally divided between the state and the center. The division is actually not going to take place. They are going to be charged separately in the bill. That means, if I am issuing a bill, I will charge the central GST separately and the state GST separately, which will be an equivalent amount. Suppose it is 18% tax, I think that is the main tax which is going to be paid by most of the people. This 18% tax, 9% will go to the center and 9% will go to the state. I think that is what is the consensus right now, on the basis of which we are going on. Although the different laws, that is the state law and the center law, has permitted the state as well as the center to even vary this, but they can vary it only on the recommendation of the GST council. And the way the consensus emerged, as of now, does not appear to be any policy, any possibility that they will be charging differential rates. The way it is coming up is the state and the central rate of tax is going to be the same, and no other cess or other duties, except I think one cess which we are going to talk about later in relation to interstate transaction. that is of course is still being debated, that we will talk about later. Now, we have already talked about how the billing will be done when we are going to actually do the sale within the state. But when the sale is happening outside the state, that means you are actually selling it from one state to another state, we are right now on the concept how it is going to be charged. So, when suppose a person sitting in Haryana sell the goods to somebody sitting in Tamil Nadu, that is the buyer is in Tamil Nadu, in that case the seller sitting in Haryana, he will charge a single tax which is known as IGST tax, which is called which is primarily integrated goods and services tax. Integrated goods and service tax will be combination of the state GST as well as the central GST. A combination total of that will be charged as the integrated GST. This is not known as interstate GST, this is actually known as integrated GST, that is the name which has been given, not the interstate, because this is a very peculiar law. What is happening is, suppose you are a dealer, you have purchased goods locally here, you are a trader, or you have manufactured in within one state and then you sell it to other state, and or you have bought it from somebody else, you already paid GST at the time of purchase. You have paid the state GST and you have paid the central GST at the time of purchase. But when you export to the other state, that means you are transferring the goods, you are supplying the goods to the other state, whether it is going to be your own warehouse or it is going to be your customer. In both the condition, the IGST has to be charged, which I have told you. If 9% was state GST, 9% was CGST, then a combination of that, that is 18% will be charged at IGST by the person who is exporting. And against this IGST, there is because this is a VATable law, as we have the value, as we have the SENVAT law for at the center, as we have the VAT law at the state. This has a similar feature, that whatever is the input tax you have paid, that input tax can be adjusted. So, if you have paid the IGST, if you have charged the IGST on your bills, that IGST will be recovered by the seller from the buyer, and he will pay this IGST, and correspondingly he can take a credit of the CGST and SGST which has already been paid. I think they have to be adjusted in a particular order. That order is, the IGST liability of a person can be adjusted in this order, because this adjustment I think we are talking about. IGST can be adjusted first against IGST liability, IGST input credit itself, then thereafter it can be adjusted against the CGST input credit, then thereafter it can also be adjusted against the state GST, and in the last it can be adjusted against the union territory GST, because I think all the union territories which are not having their own legislatures, they have been kept in a separate basket, like Pondicherry and other union territories, Chandigarh and other union territories where there is no legislature, they have been kept separate. All the states like Delhi, who are although not full-fledged states, but they still have a legislature, they have been given similar treatment as good as other states, and they will be levying state GST and not the union territory GST. So, I think there is a 4 layer, as I have explained to you. The top layer is IGST, which is a tax which is being charged at the time of export of goods from one state to another. At the time of import of goods from outside India to India, also IGST will be charged, because I think this is a very peculiar change which this Constitution Amendment Bill has come, because as of now when we import the goods, there are only 2-3 kinds of taxes which are levied. One is of course custom duty, which will really continue. Then we have SAD, SAD is a special duty, and then we have a countervailing duty. Countervailing duty is almost always equivalent to the excise duty which is being charged, and there is no VAT which is charged at the time of import, and the VAT is actually paid locally after the import has been done. But to ensure that there is no import on which the tax is not paid, the government has very rightly done that as soon as you import any goods or you import any services into India, you are bound to pay the IGST. So, IGST will be paid at the time of import of goods and services from outside India, as well as export of goods from one state to another. But when you are selling within one state to another, within the state, then you will be charging central GST and state GST. There are two which are equivalent, that is 9% plus 9% you will be charging in the bill. Now coming to the other concepts, this is a destination based consumption tax. I think what is this destination based consumption tax? That is what we need to actually understand. What is happening is, suppose the goods are manufactured in Bihar and the goods are bought by Maharashtra. Now the way the entire law has been structured, the central GST, the integrated GST as well as the state GST, the way they have been structured is that ultimate tax liability will be borne by the ultimate consumer where the goods are going to be consumed, because it is a typical and very well done value added tax. So suppose you have purchased goods worth 100 rupees and you have paid 10% tax, which makes it, I will take it 20% to be better. On 100 rupees you have paid 20% tax, 10% state GST and 10% CGST for an example. So 120 you have paid on a purchase. At the time when you sell it, suppose you sell the same goods for 200 rupees for the sake of simplicity. Then on 200 rupees, suppose you actually export it at 200 rupees to another state. Then on 200 rupees you will be charging IGST of 200 rupees. Against this on 200 rupees, 20%, that is 40 rupees. Out of this 40 rupees liabilities, 20 rupees which you have paid on purchase, that is 10 CGST first and the 10 SGST which is second will be adjusted. Only the net amount, that is 40 minus 20, will be paid by you to the government in the specified bank accounts. I think for that purpose detailed rules are going to come where and how the various payments will have to be made. So IGST differential of 20 rupees you have paid. Suppose you are in Bihar, you have paid IGST of 20 rupees. Now what will happen? The goods are going to Maharashtra. In that case, what will happen is, because 40 rupees IGST has been charged by this person, to that extent this state from which the goods have been exported, this amount will be debited, and rather it will be debited to the state where the goods are imported, that is in Maharashtra, and a credit is given to this particular state because this has been charged by this state, the appropriate credit is given to this state. So in that process what is happening is that the tax which is charged by one state, through the central government mechanism, through the entire electronic system, the tax amount will be transferred to the receiving state, because 20 rupees which has been charged, the 40 rupees which have been charged on 200 rupees as IGST is actually paid by a dealer based in Maharashtra. So I think the dealer has really paid that 40 rupees, he will get the credit for 40 rupees. And appropriately, whenever he sells, suppose tomorrow the 200 item at 300 rupees locally, then he will be charging 60 rupees as tax and 40 rupees he will get the deduction. So ultimately it is only the differential amount, only on the differential amount, the 20 rupees he will pay at the time of sale, but 40 rupees he has paid at the time of purchase when he is purchasing from the other state. So that means if dealer based in Maharashtra has borne the entire 40 rupees and 20 rupees as 60 rupees, the entire tax which is paid by the ultimate consumer, and no tax is borne by the state from where the goods were actually, from where the goods started, where the goods were originated from. So it is primarily a consumption based tax and destination based tax. Ultimately where the consumer is, there has been a lot of debate on this, because initially there was a feeling that there are states which are less consuming states, they will get less tax. The states which are getting higher consumption like Maharashtra and states like Delhi, they will have higher taxes as their income, but after debate ultimately no other better method could be really worked out, because source based GST was not working out. Now value added tax principle is being followed, a seamless credit at each stage is given for value addition. Another very important concept which has really come in, first we are talking of important concepts, then I will take you through all major concepts. The concept of supply instead of manufacture, sale and service. We are aware that central excise duty is being charged on the basis of manufacture. As soon as you manufacture a goods, you become liable to pay excise duty. Similarly, the sales tax or VAT was being charged on the basis of sale as an activity. Similarly, service tax was being charged when you render somebody a service. but the GST as a law has used the word very peculiar concept of supply. That means transfer of title of goods from one person to another is no more necessary, so long as there is a sale, rather than sale, so long as there is a supply of goods or supply of services, you are going to actually attract the GST as a taxation. What supply means, how supply of goods will happen, how supply of services will happen, what will be the place of supply. I think there are detailed rules, there are detailed legislation which has really come. I think we will try and study to the extent possible in this session in detail. The originator and all intermediaries in this process will only be a pass-through vehicle. That means they will be paying tax only to the extent of value addition, and it is ultimately the tax is borne. Ultimately, the tax is borne by the state or the person who is a final consumer. That means there is no tax liability or tax incidence on the manufacturer, on the trader or the service provider. I think this is going to be very good news for all of us as company secretaries also, because if you see as a company secretary, when you provide various services today, you are liable to charge service tax on your bills. But when you want to actually adjust this, the input you get is only for input services. You suppose you have taken work from another company secretary or another professional or any other service, for example telephone bill and other, that adjustment is possible. But whatever goods you buy for the purpose of providing these services, suppose you are buying stationery or you are buying computers or you are buying air conditioners for your office, I think there are several other things on which there is no adjustment of the tax which is currently happening. But in future scenario, as we clearly see, whatever GST is going to be charged by a company secretary on his bill, he will be able to adjust GST on the goods which he has purchased as well as the services which he has purchased. One more very important aspect which I like each professional to actually know, each service provider, for every service provider it is actually a very important opportunity, because what was happening earlier was the central excise duty component, although typically a service provider was entitled to get SANVAT credit, but actually what was happening, because of the complexity of central excise law, a large number of first stage and second stage dealer, I am not going to the details of who is a first stage dealer, who is a second stage dealer, because all these concepts are now going to go away. There is no point understanding them now afresh, because the time has come to unlearn what all we have learned in service tax or in excise duty or in VAT. We have to actually relearn this entire topic, entire subject, and actually become expert of the goods and services tax. So now coming to this excise duty adjustment, suppose you were buying computers for your office as a service provider. The computer dealer, he is not registered. If he is not registered under central excise law, he could not have given you a central excise, a bill on which central excise duty is separately shown. Although he might have borne that central excise duty at the time of his purchase from the manufacturer, like any other manufacturer, he might have bought it, he has borne the excise duty, but since he is not showing on his bill, because he is not registered as a excise dealer, we as professionals, including all service providers, were not able to avail this excise duty. I think this is going to be a very big relief. That means our cost of input is going to go down substantially, because all the capital goods which we are going to purchase for the purpose of providing services will be entitled to appropriate input credit, except I think there are going to be some exceptions, like for example motor vehicle could be one exception. There could be some more exceptions which may come in future, as will be notified by the government before of course this act becomes fully operational. The notified date is yet to be notified, expected to be 1st July 2017. In fact, after passing of this, now the stage is all set for all the state governments, all the union territories to actually pass a similar law in the name of respective state GST. And once this is passed in most of the states, I think the doors will be completely open for starting a new era of goods and services tax. We have also noticed that a large number of rules have also already been announced. We will not be able to talk about the rules at this moment, because right now our topic is GST as a conceptual framework, but a large number of rules are already there on the website of the GST Council, as well as on the website of Central Board Excise and Customs, as well as I think various other websites are having this rules. So, those who are interested can actually go through the act as well as the rules. Act I am talking because it is almost an act, because President is likely to sign it very soon. Now, coming to, I have already explained to you that this is a dual tax structure. Central GST and state GST are two separate portions, but they are actually subsuming themselves into interstate GST when it comes to export of goods from one state to another state. When you export actually goods from India to outside India, there is no GST, you will be charging, neither the IGST, nor the CGST, nor the SGST, and all exporters will be given refund of the tax which they have paid on their input. There is a procedure which has been prescribed, and government is actually promising an automatic input credit. Now, going further, I have already explained you each taxable transactions have two elements, that is central GST and state GST. Interstate transaction have IGST, imports we have IGST, exports are tax free, and IGST levied and collected by central government and apportioned between center and state governments based on a formula which all of us have briefly discussed. Now, I am sure it is clear to most of you how this adjustment is going to take place, but if there are any questions about how this is going to be run, I think we are going to take towards the last part of this webinar. I think after 3:30, quarter to 4. In the meanwhile, you can keep on sending your questions one after another through email to us, and I think we will be able to answer all the questions. The emails are already known to you. You can send your questions. We will take all the questions one by one as soon as the time permits us. So, just to recapitulate, the present SENVAT-VAT mechanism which is there, the excise duty and service tax are part of the SENVAT, where they are getting adjusted with each other. VAT is not getting adjusted with that. Similarly, excise and the service tax is not getting adjusted with VAT. Now, this is a peculiar mechanism in which through the IGST, everything is getting submerged, although there are two dual structure, but still IGST has given a common route for this mutual adjustment wherever it is required. Now, taxes which are going to be subsumed, we already I will still recapitulate, because this is this is the starting and first, and slowly it will get into the mind of each one of us. The central excise duty, the additional excise duty, the additional custom duty, the countervailing duty, the special additional custom duty commonly known as SAD, cesses and surcharges and service tax, all of them are getting submerged into the GST, the central taxes, all central taxes. When it comes to state taxes, it is VAT and CST. CST I am talking as a state level levy, because although it was being collected by center, the CST, it was the entire proceed was going to states. So, VAT as well as CST both will get submerged. I think this CST saving of 2% itself is going to be a major saving, and this will actually push the interstate trade very substantially, because today if you are a person sitting in Delhi, you want to sell it to Maharashtra, or if you are sitting in Tamil Nadu, you want to sell to somebody in Karnataka, you are bound to levy the central sales tax, even if a form is received, even if the other person is a registered dealer, even then you are bound to charge this 2%. So, this 2% is the additional cost which is never given as input credit anywhere. So, this 2% loss in the interstate was actually promoting a large number of branches which was coming. Almost all persons who have larger sales across India, they were setting up their own branches, and was also transferring the goods from one state to another. In that process also, a substantial portion of state VAT they were losing. But now the manner in which the new law is structured, there is no loss, no cascading effect, no loss of input. Almost entire input tax which you have paid will be adjusted against your output tax liability, and that is going to be a major saving to all traders, all manufacturers, and service providers like company secretaries and other professionals have to have a really major gain. So, besides state taxes like VAT, CST, taxes on interstate sale, local taxes, entertainment tax, purchase tax, mandi tax, other state specific local taxes, the luxury tax, tax on lottery and betting, and octroi and entry tax. All these taxes are getting submerged into the common law which is known as goods and services tax. a very, very good beginning which we are entering into. Now, I think principles which are adopted for subsuming is taxes primarily in the nature of indirect taxes, either on supply of goods or on supply of services get submerged. Taxes subsumed should be part of the transaction chain commencing from import or manufacture or production to ultimate supply. Whosoever is coming in that chain is they have tried to really bring in. Subsumation should result in free flow of tax credited intrastate as well as interstate, because even if all taxes have been subsumed, the very big challenge was whether there is going to be seamless credit. The word seamless why I am using is there is no hurdle in any credit. You have paid tax on your input, any kind of input tax you have paid, whether state tax or the center tax, you should be allowed adjustment of the same against your output liability. So, there is a very less likelihood that there is going to be very, very large mismatch, except the refund cases will happen in case of specialized cases like export, which we have really just briefly touched. Now, revenue fairness between union and state individually as well as combined has been a very, very big attempt which has been made. Now, what are the expectations from GST? Everybody is expecting differently. The economy is expecting differently, government is expecting differently, businesses separately and consumers separately. What is the wish list? And how far we are going to achieve this? I think each of you who is a professional, or I am told that even people from public at large who are not professional company secretaries, who are also other people, because I think the institute is working very hard for all the stakeholders, and this exercise is primarily an education exercise for the benefit of public at large. So, I think this wish list is there with everybody. What the economy is expecting? I think everybody is talking because of the free flow and because of the fair treatment. The one market, one tax may add up to 2% of GDP in the very first year, the additional 2% GDP, boost to investment via cheaper capital goods. Why we say cheaper capital goods? Because capital goods, whatever taxes have been paid, will be adjusted as an input credit. So, whatever you have paid excise duty, you have paid VAT, all that was not getting adjusted fully in all the circumstances. But now, if you count both of them, then in total around 20% of the amount which you pay on the capital goods will get really adjusted. Even if you have paid 18% GST, the entire 18% GST will get adjusted into your output liability over a period of time as has been prescribed. Like earlier, it will be given in two phases. Manufacturing to become competitive and boost to make in India as well as export, because there was a very big complaint by the exporters that our cost is going up because of cascading effect. What is this cascading effect? The cascading effect was primarily coming because of non-adjustment of the input credit, and that means you were paying tax on tax. You earlier paid central excise duty, now you pay VAT. So, you are paying actually VAT not only on the principal amount, but also you are paying VAT even on the excise duty component. That particular cascading effect, plus on central sales tax, in any case I have already explained to you that cascading effect was happening, and I think there are several inputs on which credit was not becoming possible to be availed. As service suppliers we have already seen, we are not getting input credit on so many things. Now, what the government is expecting? The government is expecting higher tax revenue owing to lesser evasion and wider tax base. How this lesser evasion and wider tax base is going to happen? Because the manner in which the government of India has actually structured this, a very, very smart move on the part of both the state governments as well as the central government combinedly under the leadership of the finance minister. Because input credit is being given, anybody who is earlier not issuing the bills, you are going, okay, whether to issue the bill, why I want to take the bill, you leave the tax. Because in that case what is happening is, if somebody is actually selling goods without charging tax, in that case his input tax, the input which he has paid, ultimately in the chain somewhere, wherever the chain is broken, a manufacturer has charged the GST, he has sold it to the trader has sold to the wholesaler, the distributor has sold to the wholesaler has given to the retailer. At every stage GST has been charged. So, most of the retailers will hardly have any option to not to charge GST on their bills. The only thing is there are two schemes. One is all small traders or small service providers and all small manufacturers. They have been given exemption from registration. They can voluntarily register, they have been given exemption for registration up to 20 lakh turnover in across the India, and in case of some specified states which are hilly states like Assam etc., they have been listed. In those cases 10 lakh will be the benchmark. That means up to 20 lakh, if anybody is having a turnover, that is supply turnover of 20 lakhs, then he need not register himself under the GST, he need not charge GST on his bills. But there is a very peculiar thing which is happening in this particular case, that in case you are buying goods from a unregistered GST, unregistered dealer like this who is not registered, in that case the buyer, if buyer is a person who needs credit or who is himself a registered dealer, then he will have to pay additional tax from his side on reverse charge basis on this purchase from an unregistered dealer. That means there is a double whammy on it. So, wherever there is a chain, wherever the goods are going not to the ultimate consumer, but whenever they are going B2B, there is such a great incentive to keep on being as a part of the chain, that is this chain of GST one to another, the seamless chain which we really talked about. So, because of this, the government of India feel that evasion will be lesser. We have seen, practically we have seen in various states, various wholesale as well as retail area, there are number of sales which are happening outside the books in cash, and they are not getting recorded anywhere. I will take a 1 minute break for water. 1 minute please. The government is feeling that this tax will be easier to administer, because rather than 20-25 taxes, there is only going to be one tax, and it is going to be all controlled electronically. Decline in cost of tax collection. One more area which I want my professional friends to understand when we are talking of lesser tax evasion. The very peculiar thing which the government has really brought into this entire thing, which is of course being practiced right now in certain states, which is matching of bills. You know what is happening is, in case you have purchased your goods from Mr. A and you are selling it to Mr. C and you are Mr. B. If you are Mr. B, on your sales you are charging GST, on your purchases from A, Mr. A has actually charged GST which you have already paid. So, all your sales will be included in your return, and your purchase will also get auto populated. That means based on Mr. A's return which he will file with the GST department, your purchase based on your purchase number, based on your unique number, based on your registration number will get auto populated. That means suppose you have purchased goods worth 20 lakhs or maybe say 2 crores worth goods you have bought, and it is only up to 1 crore 80 lakhs worth of goods for which invoices, the people who have paid, who have raised invoices, they have filed their VAT returns or they have paid value added tax. In that case, the balance 20 lakhs of purchases which there is a mismatch between the purchase which you have recorded in your books of accounts and the purchases which you have which is coming from the central server of the GST department. This mismatch, I think government will give you some time. I think that nitty-gritty we are not going to the details of the timing. The time will be given for you to take up with your supplier that jolly well why you have not really paid VAT on this, why you have not filed your GST return. In case your supplier failed to file his GST return in time, or he fails to pay GST, in that case you are not going to get credit of that particular GST. So, appropriately it is very clear that it will be impossible, it will be very difficult for anybody. We can't really say, there are imaginations are very wide in with the unscrupulous people, but the way it is structured, no credit of input can come unless the person from whom you have purchased that particular goods or services, he had paid his due GST. I think this is very clear. Now we go to the expectation of the business. The business is expecting that there is going to be lower logistic cost and they will save 30 to 40% in the logistic cost. How they are going to save? This is a question which might be coming to mind of each one of us, because whenever all of us have travelled from one state to another, we have seen a long queue of trucks, a long queue of other vehicles who are carrying goods, which is standing on various nakas, various state borders for the purpose of checking. the goods are going from one place to another, they are stopped at the border of the state. Then everywhere wherever the entry tax is to be charged, at the stage of entry tax, and then the municipality is charging entry tax, and the state government is charging entry tax, and various kind of octroi, etc. The vehicles are stopped one after another. And suppose a vehicle has to go from Delhi to Tamil Nadu, Chennai, it has to go through a large number of states. Even from here to Bombay, or from Bombay to Assam, a large number of states one has to really pass through. And typically within every state also 5 to 10 nakas are there because of one tax or the other, and even the state borders. So in total from Delhi to Chennai, one of our friend logistic supplier, he was saying that my truck stops minimum at 80-85 places, and every stoppage may cost few hours, sometimes even full day. So much wastage of time, money and effort, that is why the logistic cost goes up. So this is one major area because the government is trying to do it in this manner, the way the whole scheme is structured, that there will be a seamless movement of trucks, like there is seamless credit which is happening, and the government is trying that based on the methodology which the government is bringing, the trucks need not really stop on any of these nakas except barring for you can say sudden check, or maybe some kind of a information they have that goods are going without appropriate supporting or without appropriate bills, then I think they may come. Reduction in compliance cost and dispute, the way the law is structured, the government has tried to actually structure it in a manner to hear everybody, so the disputes are less and the compliances are minimal. But that is expectation of the business. But how far this expectation is going to be reality, I think especially for we professionals, we need to understand that on the one hand the business is expecting lesser compliances, but when all the laws are getting combined into one, the manner in which the government wish to monitor, the manner in which various kinds of returns which are going to be filed every month and every quarter and every year, there are so many returns which are going to be filed, and they are going to be checking of the input as well as output, whether input credit is taken properly or not. There is going to be a big amount of professional opportunity for each professional to help in these compliances, because the compliances initially may become very heavy, later on they may become routine, but they will still need the support of a professional who understands this GST law. He will be able to guide the trader, the manufacturer and the service provider as to how to maintain the records, how to file the returns, and how to interpret various provisions of the law, so that you are on the right side of the law and you do not take an input credit which you don't deserve, and you actually do not go in the wrong side of the law. Now, single market according to businesses will allow optimal business decisions and protection from cheaper imports. They feel that if their goods are going to become cheaper, then they will have a protection from imports because of the credit on the capital goods which they are going to get, and lower incidence of taxes as the cascading is going to end. The consumers on the other hand, I think there is a big cheer for the consumer, because today we see all of us when we go to restaurants, we are not getting to the excise duty component which comes in. Even when it comes to VAT and service tax, on your bill you will see VAT is also being charged, the service tax is also being charged and the total amount is phenomenally high. In spite of abatement provisions, it is phenomenally high. But when it comes to GST, there is going to be one single GST and the overall incidence is going to be much lower on your food bill. You will see food is only not one item. I think almost in every item, if you see, the excise duty rate is around 12%, and in a large number of cases the VAT rate is also 12.5%, certain cases 13.5% also. But the most important popular rate, middle rate which is being announced is around 18%. So straight away 12 plus 12, 24 is being replaced by 18, and wherever there is a 5% state level tax, that is 12 plus 5, 17%, that is also almost near to 18. But I think each one of those goods may not come into 18% bracket, they may go to lower brackets of 5% and maybe one more bracket is there in between. Now coming to taxes on goods to come down, prices could fall, the benefit if the benefits are passed on. This if is coming, but the government has tried the way they have structured the law that you can't really gain at the cost of the consumer. In case there is a reduction, you have to pass on this benefit to the consumer. For this, adequate provisions have been made in the law. Taxes on services may go up, this was the expectation, because current rate and the middle rate there is a gap. We have seen from 15% the service tax rate is going to go to 18%, but I am sure the service providers will be able to reduce cost of their services because their input cost is going to come down heavily, because they will get input on capital goods, they will get input on services, they will also get input on goods which they are using for providing various services. So, the base itself, the cost on which the service tax is going to be charged can go down by about 10% to 20% depending on the case to case. So, correspondingly I think this can also be belied. Now, coming to the specific provisions, I think I will try and take you through some major concepts of the Goods and Service Tax Act Bill 2017, that is the Central Goods and Service Tax Bill 2017, and certain specific terms I am going to really take you through. And one by one I am going to explain to you the niceties of each and every term, which will clear to you the concept of GST quite a lot substantially. Broadly we have covered the broad concept, now we are coming to the specifics. There is one concept, address of delivery. So, I think one has to be very clear when he is issuing the bill or when he is receiving the bill, the address of delivery, the delivery where the goods are to be delivered or where service are to be delivered, that address should be given carefully. Address on record is the record, the address which is available with the supplier beside delivery address. It is possible that your customer is in Bombay, but you send his registered address with you, or your record is in Bombay and you are sending him goods in Nagpur. It is possible. So, the address for delivery will be Nagpur, the address on record could be a Bombay address. Agent is a very important thing which is becoming important in this law, because earlier when you were acting as an agent, you were paying only on your services. But now the way it is structured, the role of agent is also as good as the principal. So, the definition of agent is very important. I will explain you how the role of agent is becoming as good as the principal as we go further. First we talk of actually definitions. Agent means a person, it includes all kind of factors, brokers, commission agents, artiyas, pakka artiya, kacha artiya, del creditor agent and auctioneer or any other mercantile agent. You may call them by whatever name. Any kind of agent is classified in the definition of agent. Now, what is aggregate turnover? I think this concept it is very, very important for each one of us to understand, because there are two various schemes which are going to really run based on turnover. For example, the initial exemption, as I have talked to you, initial exemption is 20 lakh as the turnover, as the taxable as the turnover which is up to 20 lakhs turnover, you are not required to get yourself registered, whether you are a service provider or you are a manufacturer or you are a goods dealer or you are a trader. So, what is taxable turnover? What is aggregate turnover and what is taxable turnover? I think that all we will understand slowly. First, let us understand what is aggregate turnover, because this 20 lakh limit is based on aggregate turnover. It includes taxable supplies, that means the supplies on which tax is going to be charged, supply of goods as well as services we are talking about. Exempt supplies are also to be included in case of aggregate turnover. The export turnover also will have to be included in the aggregate turnover, and interstate turnover, even if it is given into same pan. That means interstate turnover not only to third parties, but also when you do interstate supply to yourself, that means to your own depot in some other state, you do a transfer of goods from say Chennai to Karnataka. So, when you transfer a goods from Chennai to Bangalore, for example, you have a depot in Bangalore, at that time also you are supposed to charge IGST, as I have explained to you. So, accordingly that amount is also included in your aggregate turnover, but it excludes, the turnover excludes central tax, state tax, territory tax, integrated tax and cess. There is one cess also we will discuss as we go further. So, I think the amount of the tax is not part of your aggregate turnover. So, if you are charging 20 rupees a tax on 100 rupees, then your turnover is 100, it is not 120. That I think the law is very clearly clarified, but it will include taxable supplies as well as exempted supplies, export as well as even transfer to your own in the same permanent account number, same will be there. But intrastate if you supply, that means within the state if you supply to the same PAN number, suppose you have a depot in Bombay, you have another depot in Nagpur. In that case, that transfer will happen only through some documentation, but it will not be counted on your turnover, nor you have to charge any tax for that particular purpose. The definition of agriculturist is also very peculiar for all of us to actually understand. There is a lot of debate which has happened, and there was a big debate, the agriculture being carried out by corporate, the agriculture being carried out by partnership firm, or they are being carried out through LLPs or various other modes. But the government has recognized only one kind of agriculture, two kinds. Either you are an individual or you are an HUF. If you are carrying out agriculture operation only as an individual, or you are carrying out as a HUF, only in these two circumstances you will be considered as agriculturist. Not only this condition, you have to undertake cultivation of land by own labor. That means if you are individual, your own labor, by the labor of your family. Family also they have defined what do they mean with the family, and by the servants on wages payable in cash or in kind or by hired labor. But what is mandatory is under personal supervision of the individual or the HUF members. Either you or your family member should be supervising them personally, only then you can hire labor and undertake agriculture operation to get the exemption benefit from the GST in case of agriculture goods. So, I think we will go further. This is a very, very important milestone, because all kind of corporates, for example, we have tea gardens. Tea gardens, of course, on one side we can leave because they were still even earlier treated differently. But there are large number of corporate who are, for example, they are creating seeds. For example, there are seeds companies, and there are various kind of operations which they are carrying out agriculture operation. Or there are people who are growing trees from starting and then cutting trees and then selling them. They are also coming in agriculture operation. All that will not come for the purpose of GST. It is not agriculture, and you are not entitled to exemptions which we are going to really talk about. Assessments of various kinds have been recognized by the law. Assessment could be self-assessment to start with, it could be reassessment, it could be provisional assessment, it could be summary assessment, it could be best judgment assessment. I am not taking into the details of the niceties, because I think there are several other sessions to really talk about it. The concept of associate enterprise has been picked up from the income tax law under section 92A. Whosoever is considered as an associate enterprise, that concept has been picked up. I would like to actually briefly elaborate on the terminology of audit. Audit is being used in two perspectives. I think because there is a mandatory audit of all persons as per the threshold who will get registered to undergo subject to a GST audit, either by a chartered accountant or by a cost accountant. Beside that, there are going to be audit by the department in exclusive cases, in select cases. So, what they have said is audit is examination of records, examination of returns, examination of documents to verify the correctness. What they will verify? The correctness of the turnover as you have filed in terms of a return, correctness of taxes paid, which are showing as taxes paid, actually whether you paid those taxes, the refund which is being claimed by you, the input tax credit whether it is available to you or should not be available to you, and of course compliance of various provisions, act and regulations and rules, that all that will be part of the audit exercise. Now, the term business also, it is very important for all of us to understand, because the supply of goods and services in the course of business is going to be taxed. That part we will discuss later, but I think the definition of business has become very wide. I think we have never understood business to be as wide terminology as the new law has really come to. I think I will try and take you through. Business includes, this is an inclusive definition. So, I think there can be more things which can really come by the generic word, but whatever it includes is trade, commerce, manufacture, profession, vocation, adventure, wager of any kind and similar activities. Incidental and ancillary activities to all of the above will also be included, but I think the list does not stop here, because list goes further. It goes on to say that whether or not there is a volume, frequency, continuity or regularity of such transactions. We are all aware there are large number of decided judgments, more particularly in terms of the income tax law and various other taxation statute, as to whether a particular activity is business or it is one-off activity, or it is only few activities, whether it should be called business or not. We are aware of the famous controversy of whether buying and selling of shares will be treated as business or it will be treated as capital gain. I think we are not going into there, but I think here it has been very peculiarly said. They said even if for the purpose of GST, whether or not there is a volume, whether there is a frequency, whether there is a continuity or regularity of such transactions, even then if the transaction is the nature of trade, commerce, manufacture, profession, vocation or adventure, in that case, or wager, even then if it is in that nature, even if there are not too many of transactions, even then you can be construed as carrying on business. It is possible that you buy certain goods one off, in one off transaction you buy goods worth 50 lakhs and sell them for 70 lakhs, and you feel that no, this is only one transaction, I am not carrying out business. But if it is in the nature of business, I think ultimately the manner in which it is carried out, so even if it is only one off transaction, there is not adequate volume, there is no frequency, there is no continuity, there is no regularity, even then depending on the nature it can be construed as business. Then even before you commence a business or during the closure of business also, whatever activities you carry out, for example, you will be acquiring capital goods, for example, you will be disposing of capital goods when you are closing it, for example, you will be selling the leftover goods also or scrap etc. at the time of closure of business. I think all those activities have also been included in the definition of business activity. Now coming to the services which the clubs, association, societies or any similar body provide to its members, either for subscription or for any other consideration. If they provide any facility or benefit to the members, that will also be covered in the definition of business. Because somebody may say that we are providing, for example, suppose you are providing education to a group of people who are member of a particular group, a study circle, and you collect money from everybody. You may say it is not business, it is only we are doing for members, we are collecting money from members and only for members this activity is there. Even then if you cross the threshold limit, you can be subjected to GST. So provision by a club, association, society or any such body for subscription or any other consideration of the facility or benefit to member, it will be covered in GST. So the way this interpretation is coming, it is going to be very wide. Similarly, admission for consideration of persons to any premises, for example, rent or lease, will also be considered as business activity. They have not specifically here distinguished between letting out for commercial activity or letting out for residential activity. And there were some newspaper articles which have seen that possibly every kind of rent may be subject to GST. The way the definition has come, yes, it looks likely, but as it appears to us based on the discussions we had internally as well as among leading professionals, I think the government will come out with a large number of exemptions and special notifications. So residential rentals may not be covered ultimately in the definition of business activity and also ultimately in the business of taxable event. But maybe beyond a particular size of renting, even in residential, the government will consider, depending on if you are doing residential renting beyond a particular scale. Service supplied by a person as a holder of an office which has been accepted by him in the course of furtherance of his trade, business or vocation. Suppose you take up any office to further your trade, profession or vocation. An office, for example, I think what is coming to my mind is the office of a director, right? That is also construed as business. Service provided by a race club by way of totalizator or license, I think all race clubs are also being covered. Any activity or transaction undertaken by the central government, a state government and a local authority in which they are engaged as a public authority, they are also being covered in the definition of business very peculiarly. So I think if we see the definition of business is very, very large. Although there are going to be some exemptions, there are going to be some carve outs which we will discuss as we go further. There is one more definition, they have defined business vertical. This is something similar to business segment which is there in the accounting standards. So if you have a business vertical, you can opt for different business verticals, you can take different kind of GST registration. That is where this definition has come. For example, your company is in textile also, your company, same company is in steel making also. So you may like to have different registrations, maybe under same PAN, the government has permitted, even if you are in the same state, you can have completely different registration that the government has permitted. Now capital goods has been very, very nicely defined. That means goods the value of which is capitalized in the books of accounts or the person claiming input tax credit and used, I think very important for us to understand, used or to be used in the course or furtherance of business. there are 4 limbs which you need to understand. Used or intended to be used. That means capital goods, user is not mandatory. Even if as soon as a service provider, for example, you have purchased computers, or suppose you are setting a business, at that stage you have purchased large number of capital goods items, and you have actually these capital goods you are acquiring, even if when before they are put to use, suppose you are setting an additional branch, suppose even if they are before they put to use, the input credit can be availed by you based on your other output liability which may be there in the same state under the same registration. Now, that means even if the goods are not used, even they have only intended to be used, getting credit. And 2 portions, in the course or furtherance of business. That means both the things are there, not only in the course of business, but whatever expenditure you incur, capital goods you take for the purpose of furthering your business. That means for the purpose of promoting your business. It may not be your business, but for promoting your business also, suppose for that purpose you buy certain capital goods, you will be still be entitled to the credit. What kind of disallowances will be there, what will not be allowed as a credit? I think there are several apprehensions and expectations that they will become clearer as the rules will come, as the notifications will come, because government has kept those powers with them as to what kind of capital goods credit will be permitted, what kind of capital goods credit will not be permitted. For example, one clear casualty which is coming is, suppose you as a company secretary buy a new Mercedes for 75 lakhs on which you have paid 10 lakhs as excise duty, then this 10 lakhs excise duty may not be permitted as the input credit to you. So, I think that is what is of course expected, but I think the common expectation is that the computers, the air conditioners and other input, for example, whatever input you buy stationery or various other input, telephone and other communication, internet, all that you will be entitled to input credit thereon. Now, there is one more important concept, this is known as casual taxable person, a person who occasionally interacts, who is not regularly carrying on business, but in the nature of business he carries on an activity and he becomes taxable because of that casual activity, where he has no fixed place of business. Even if he has no fixed place of business, he buy goods from one place and sell to another place, undertake that casual activity, even then he can be subject to the limitation of whether he reaches that threshold of the exemption limit or not. There is a common portal which is coming, common for goods and services tax, electronic portal which has been created by Government of India, the GST portal. This portal is going to be very, very useful. GSTN, which is being, I think, several thousands of crores the Government of India is spending on this, on the hardware as well as the software, because this is going to be the backbone of the entire activity of GST. I think that is what I remember. I heard the Honorable Prime Minister, before he became Prime Minister, in a speech he said that we will bring in GST only when we are fully ready as far as the computer backbone is concerned. And I think I am sure the government in last 3 years after that speech has gone a very long way in establishing the entire framework, and the software as well as hardware are in the advanced stage of testing. We are sure that it is going to really work. The law has also defined a company secretary, means a company secretary as defined in section 2(1)(c) of the Company Secretaries Act 1980. Very peculiarly I noted, this does not refer only to company secretaries who are practicing, who are in full time practice, who are practicing company secretaries. The law is referring to all company secretaries. Similarly, the law has defined chartered accountants and cost accountants also in a similar manner. Now, another important concept which we need to understand, very, very important concept, is composite supply. What is composite supply? I think first I will give you an example and then I will explain it. Suppose the goods are packed and transported along with insurance, and the goods are supplied with packing material and the insurance by you to your customer. In that case, there are various things which you are giving. You are giving goods, you are giving insurance as service also bundled with this. So, what this saying is, means a supply by a taxable person to a recipient consisting of 2 or more taxable services. Either there could be 2 or more goods, or there could be 2 more services, or there could be goods as well as services both, where one of the supply is principal supply. That means, in this particular example which I took, where you are selling goods under a packing, there is somebody who is providing packing service, then there is insurance, then I think you are even covering, suppose its transportation to your customer place. I think all this is a bundled thing. But the main thing which you are giving is, the principal thing is that the goods, the underlying goods which you are selling, I think that the tax will be based on the rate which is payable on that principal supply, on the entire consideration which you are really asking. I think that is the purpose. But suppose it is not a composite supply, it is a mixed supply. Suppose you are selling in one packet chocolates also, biscuits also, and various other assorted items. In that case, it will be mixed supply. Certain items may be taxable at 5%, certain items may be taxable at 18%, certain other items may be taxable at 20%. I think in all those cases, in case of mixed supply, the items which could be supplied even separately, they are not bundled out of any necessity. They are bundled primarily for the sake of convenience or for the purpose of selling a combined bouquet. In that case, the tax will be charged on at the highest rate. That means that the goods which are included in this bundle, the highest rate for this good, suppose it is 18% is the highest rate, then 18 will be charged, irrespective of the fact that some goods are 12%, some goods are 5% which are included in this. So I am sure you have distinguished between composite supply and mixed supply. Composite supply, there is one principal supply and the other supplies are only ancillary or incidental. Whereas in a mixed supply, you add many kind of goods. You may give, for example, surf. Along with this, you can give maybe some other item also as an additional item. So two things are bundled. So that is called mixed supply, and the highest rate of tax will really apply in that case, highest between the two. Now consideration is another concept which is very important for us to understand, because ultimately the tax is going to be payable on the consideration which is passing, and in certain cases even if no consideration pass, even then tax will be payable. So how we are going to determine has also been defined in the law. What is consideration? Consideration is any payment made or to be made, not only the payment made, payment to be made either in money or otherwise. You can give it to the recipient of the goods or services, or the payment could be received by somebody else. Even then it will be considered as consideration, but it does not include the subsidy which is either coming from the central government or coming from the state government. The monetary value of the act or forbearance, I think this also, suppose you decide not to actually, you forbear, you do not do a particular thing and you charge money for that, even that the monetary value of the act or the forbearance will also be considered as a consideration which is being passed from one party to another. Now a very important shift here as compared to the present position, which I like to actually highlight in consideration, which relates to deposit. In the earlier law we were talking of security deposit, but the concept which is being used in section 2 subsection 31 subparagraph B in the proviso, this is very important. I like you to note down each one of you, because the word consideration has been defined under section 2 subsection 31, and subclause B, there is a proviso below this subclause B where it defines, provided that deposit given in respect of supply of goods or service or both shall not be considered as the payment made for such supply, unless the supplier applies such deposit as consideration for the said supply. That means, suppose you have actually given a deposit, they have not used the word security deposit here, I do not know what is the objective, but earlier service tax law, we are if we take you to the service tax law, an advance or a deposit which is given, which is adjustable against supplies, even at the time of giving of the advance or giving of the deposit itself became taxable, and it is only security deposit which is not taxable, which is not adjustable. A non-adjustable security deposit, a security deposit which will be refunded to the person to who has given the security deposit, was only considered as a deposit which was exempted from the wrath of the service tax which was payable. So if as a service provider you have received some money from somebody as advance, you are paying actually service tax immediately thereon. Even now the situation will remain same, except in those cases where it does not come as advance, but it comes as a deposit. What they say, it will not be considered as payment made unless the supplier applies such deposit consideration for the said supply. That means, suppose you have taken it as a deposit, even if it is later on adjustable against the supplies after 1 year or 2 years, even then tax, it will not be considered as payment received, it will consider as payment received only when you actually adjust against the supply of goods or services. This is a major change, and I think this is going to have a very, very important bearing on the tax liability. So, we need to actually really understand the continuous supply, also continuous supply of goods and continuous supply of services have also been defined, because not only through pipeline and through many other modes the goods and services are provided which are on continuous basis, and every transaction is not billed. The billing is done on a periodic basis, either but the supply is concurrent or on recurrent basis. Either you give regularly every day, or you may give continuously on a recurrent basis, but you actually raise your invoice only on regular or periodic basis that has been recognized for the goods as well as for services. Continuous supply of services also and continuous supply of goods also, both have been actually separately done. 233 actually talks about continuous supply of services, means supply of services which are provided or agreed to provided continuously or on recurrent basis under a contract for a period exceeding 3 months. That means, in case of continuous supply of services, there is one important condition, that the contract should be for a minimum period of 3 months. Only then they are permitting you to actually do a periodical billing. Even if you can do a monthly billing, suppose it is a 6 months contract, you can do it like you do concurrent secretarial audit, for example. You do it a contract for 2 years or 1 year, and then you provide service every month, and on a monthly basis, suppose you are giving bill, or you are a retainer. You are a regular retainer, every day telephones are coming or mails are coming which you are responding. In that case, that is continuous supply of services. They have permitted you to actually levy tax on periodical sales based on periodical invoice, but at the same time what they have said, that the contract should be for a minimum period of 3 months. But there is no such requirement in case of goods, because goods are peculiarly different in nature. Continuous supply of goods happen in a very, very different manner, and they have said continuously or on a recurrent basis under a contract, whether or not by means of a wire, cable, pipeline or other conduit, and for which supplier invoice the recipient on regular or periodic basis. So, accordingly it has been covered. Now, I think I have already explained you about the council, the Goods and Services Council, Goods and Service Tax Council is going to be remembered by each one of us, because we are going to be, it is going to be very important. Deemed export has also been defined. The word document has also been defined. I think the document could be 3 kinds, either it could be a written record, it could be electronic record, or it could be a printed record. So, all the 3 varieties of records have been recognized. Another very, very important concept which was not there earlier, neither in the VAT law nor in any other law, a electronic commerce operator and electronic commerce both have been defined. Electronic commerce operator means, because this will have a very, very significant impact on all your clients as well as all people with whom you are in touch. That is why it is very, very important for you to understand. Electronic commerce operator means a person who owns, operate or manage digital or electronic facility or platform for electronic commerce. So, I think all kind of people who are providing digital or electronic facility or platform for electronic commerce are being covered by this. Family also has been defined to include spouse and children of the person, whether they are dependent or not, but the parents, the grandparent, the brothers and sisters are included in the definition of family only if they are dependent on the individual about whom we are talking about. I think we will go further, the time is running out, the concepts are quite a few, but I will try and see how much maximum I can really cover in today. Now, another concept which I want to actually cover is, I think manufacturing as a concept of course is very well known, but still it has been defined just to for the sake of simplicity. Processing of raw material or any other input which result into a new product, either it is give a distinct nature, distinct name or distinct character or distinct use, it becomes a manufacture. Market value has also been defined as means full amount which a recipient of supply is required to be paid in the course of obtaining goods or services, or both, of like kind and quality at or about the same time at the same commercial level where recipient and suppliers are not related. I think this market value concept is going to become very important, especially in those cases where there are transactions between related parties. And if the transactions are there between related parties, although the impact of related party transactions is going to happen, only when the transactions are happening B to C. But when the transactions are happening B to B, there is no impact, no major impact at all, because ultimately even if you are able to buy the goods at a price which is the differential price, which is not the market value, ultimately when you sell it on the value addition, you are really going to pay the tax, full tax thereon, full GST. So it will not have much difference. Mixed supply we have already understood. The definition of person is also very wide in this particular case. Not only persons who are subject to the GST law, it could be an individual, it could be an HUF, it could be a company, firm, LLP, association of persons, body of individuals, whether incorporated or not. These are all in the income tax law also. Any corporation established by the government, Central Act and the State Act, any body corporate incorporated by or under the law of a country outside India, a cooperative society registered under the laws of cooperative society law, local authority, even central government and state government also comes in the definition of a person. Society as defined under Society Registration Act, trust separately, although they could have been covered in AOPs, but they have been defined separately, and every artificial judicial person has also been included in the definition of the person. It is a very wide definition, they have tried to include practically everybody. The place of business also they have defined. I think I am not elaborating this. Places where the business is ordinarily carried on. It also includes your warehouse, your godown, and any other place where taxable person stores his goods or supplies or receives his goods or services. Also the place where he engages in business or where he maintains his books of accounts, even that is considered as his place of business. Place of supply of course has been defined in chapter 5th of Integrated Goods and Service Tax in great detail. That we will of course learn later as we go further. Registered person. There are two kinds of registration which they have identified. One is registered person is a person, rather than registered dealer, the word registered person is being used. A person who is registered under the GST law is known as a registered person, whereas one more identification which they are giving is known as unique identity number. That unique identity number is going to be given to multilateral and bilateral organizations like UNO, UNESCO, etc., because they will not be required to be registered under the goods and services tax, because they are under the understanding between the Indian government and the multilateral bilateral organization. They are not supposed to be charged, but there is a possibility, rather there is a possibility actually it is going to happen when they actually buy goods and services from various people across India. They will be paying goods and services tax on their supplies, and to enable them to actually getting that benefit which they were entitled to, a unique identity number they can apply and register themselves, and whatever goods and services they buy, it will be possible for them to claim a refund. So I think for professionals this could be another opportunity where they can help these multilateral and bilateral agencies to obtain registration of the unique identity number, and then periodically help them in working out a claim on the government and take the refund of the GST which they have suffered on their goods or services which they have availed. Now, registered person, I think we have already discussed who are required to be registered very briefly, but I think we will try and touch upon it in detail. We have 3:27, we have about half an hour, I think another 15 minutes I will spend on my presentation, and then balance 15 minutes we will try and take question answers. That is how we are really going to really utilize this. We will try and go to some other important definitions. Now, a very important definition is definition of goods, which I like to note, because it is going to be goods and services tax, which has been modified as compared to the initial model law. Goods means every kind of movable property other than money and securities, but includes actionable claim. It includes growing crops and grass and things attached or forming part of the land which are agreed to be severed before supply or under a contract of supply. That means it does not include money, it does not include security. The earlier security was included. I think there was a very big worry of the entire capital market that the word security was included earlier in the definition of goods, but now in the final act it is not part of the goods. So every kind of movable property, although I think it was removed in the second model law itself, It has been continued like this. Except money and securities, every other movable property is covered in the definition of goods. Now, let us go to the definition of services, because the tax is going to be there on goods as well as services. Services definition is very, very, very good. It says it means anything other than goods. So, that means everything on the earth which is not goods is services, except money and securities. I think money and securities again they have excluded here, but includes activities relating to use of money or its conversion by cash or by any other mode from one currency to another currency or to another form or denomination for which a separate consideration is charged. That means, suppose you are buying dollars in place of rupees, or in place of dollars you are buying rubles, and you are paying some commission for some consideration is being passed thereon, then that additional consideration which is being paid, a separate consideration is charged, then the separate consideration will be considered as service. How that component will come, that part is not clear actually. How this particular component will be decided, that part one needs to actually really understand, because internationally when we go, there is a separate commission which is being charged 2%, 3% for conversion. Whereas in India we see the practice is when you buy dollars or when you buy other currencies, they buy at a differential rate. The normal bank may be offering suppose 65 rupees for a dollar, when you go to a hotel they will offer you only 60, and when you go to a money changer he may offer you 62. So, this 65 and 62 rupees difference actually is their service charges. How the government is really going to cover, I think that detailed rules will really come. On that basis it will be really taxed. So, whenever you use money or conversion for any particular activity, then that particular service will be considered as service. Otherwise, anything other than goods is services. Now, telecommunication services also they have defined. I think we will leave them here. We will go to other important definitions and levy of tax. I take you to section 7, levy and collection of tax, because the word supply has been used. I was telling you very initially the word sale, the word manufacture, the word service has been replaced by the word supply. So, it is very important for us to actually understand what is supply, although I am told that there is going to be a very detailed session on supply and the valuation supply itself, but I think conceptually very briefly I like to cover this concept of supply. Supply means all forms of supply of goods or services, either it is a sale or it is a transfer, it is a barter, it is a exchange, it is a license, it is rental, it is lease, it is disposal. Whether made or agreed to be made, they are going to be covered for a consideration in the course or furtherance of business. So, it is very necessary for it to become a supply that it is done in the course of or in furtherance of business. That is why when I was explaining the definition of business, I have told you that the definition of business is very wide there. Even when suppose 10 people come together, they form a society themselves, or 100 people come together, form a society themselves, and try and supply that. So, they give money to the society, and the society provide them services back. Under the income tax law, there is a provision that if you are supplying services only to your own members, in that case the income which is arise, that income does not become taxable. But the government is very clear that on such activity GST will be payable, because it will be in the nature of trade. So, that is how the trade has been defined. So, beside this, all forms of supplies of goods and services, even import of services have been included in the definition of services of supply, and also there are items which are listed in schedule 1 that even if you do without a consideration, even then they will be covered in the definition of supply. That means, you are supplying goods or services without consideration as they are listed in schedule 1. I think we will briefly cover schedule 1 also simultaneously to this. What kind of transactions they are covering, in case you are doing permanent transfer or disposal of business assets, where input tax credit has been availed on such asset. Suppose you dispose of your assets which are there, your machinery, your furniture, you are closing down your business, or you want to really sell those assets or dispose those assets on which input credit you have availed. In that case, even if you do not charge consideration, it will treat as supply and will become taxable. Similarly, supply of goods or services are both between related persons or between distinct persons as specified in section 25 when made in the course or furtherance of business. That means, suppose you give goods to your own related person even without consideration, even then it will become taxable. How it will happen? Of course, there are separate provisions for that, but they have exempted, they have given one exemption. In case you give gift up to rupees 50,000 of rupees in value in the financial year by an employer to an employee, it shall not be treated as supply of goods or services or both. So, suppose you as an employee is working on a working with a TV manufacturing company, and they give you television set which is less than 50,000 rupees, then on those 50,000 rupees in a year, no goods and services tax will be charged and no levy, but there is no free lunches as far as the person who is giving gift. He may not charge goods and services tax because he is giving free of cost, but all the input relating to that particular supply will have to be reversed in their books. So, accordingly, some cost will come on this particular entity or as far as goods and services tax is concerned. Similarly, when the supply of goods happen by a principal to his agent, normally consideration may not be there. A person is my agent, I gave him goods worth 1 crore and tell him you go ahead and sell on my behalf. He may not pay me any consideration, but it is I will be charging only me service charges, but this supply will be considered as a mode of supply and will be treated as supply even if there is no consideration between principal to agent. Similarly, by an agent to the principal, when he actually receive goods on behalf of the principal, he may not charge anything because it has been received on behalf of principal only, but they will also be treated as supply. So, import of services by a taxable person from a related person or from any of his other establishment outside India in the course or furtherance of business, even if it is free. Suppose you have a relative outside India, you import services from him free of cost, even then it will be considered as supply. And suppose you import some certain goods from your own establishment which are outside India, you have branch outside India from which the goods come in, even that even if there are no charges, even then you will be subjected to goods and services tax. Similarly, the activities to be treated as supply of goods or supply of services which are referred in schedule 2, goods or services, what is goods, what is services, I am not going into those details because I think there is a separate session on this. Which supplies goods, which supplies services, there is a separate session and this will be covered. But there is a very important prohibitory clause which says that all the items which are listed in schedule 3 will not be considered as goods and services supply, will not be considered supply. What is schedule 3? I think very briefly we will see. For example, the services which an employee gives to an employer in the course of a relation to employment will not be covered as supply of goods or services and no GST will be payable thereon. Similarly, services by any court or tribunal established under any law. Similarly, functions performed by member of parliament, member of state legislature, member of panchayat, member of municipalities, member of local authorities, the duties performed by them by any person who holds such similar office or duties performed by person as chairperson or member of director of body established by government, I think all that has been exempted, even if they are not coming in the category of employees. Similarly, funeral services, burial, crematory, mortuary including transportation of deceased, sale of land and sale of building except I think which are covered in Works Contract Act, all that has been excluded in the schedule 3. I think there were a lot of eyebrows whether sale of building is or sale of land is going to be covered. I think that has been created in, already there in schedule 3. Similarly, actionable claim other than lottery, betting and gambling, that means all actionable claim are not goods and services except when it is lottery, betting and gambling. So, I think these are things which are actually not services. Similarly, if the central government provide as a public authority, they give you the engaged in public authority that may be notified by government or recommendations of the council, then I think those activities of central government will also be exempted or the state government will also be exempted for the purpose of treating them as supply within the meaning of goods and services tax. So, they will be neither treated as supply of goods nor they will be treated as services. The government has also taken one more very important power, that they can notify in case of any difficulty, they can notify that this particular transaction will be services, this nature of transaction will be goods, I think, and then thereafter they will be treated in a similar manner based on the notification. Composite supply, mixed supply, I think I have already. There is one more concept of reverse charge. The reverse charge concept is very important. I have already explained to you reverse charge concept. One concept is when you buy from an unregistered person, in that case you pay reverse charge you pay the entire GST equivalent to amount equivalent to state GST as well as central GST. In case you buy from a unregistered person, in that case you will be required to pay at the time of buying itself. But beside this, the government has kept their power in terms of section 8 bracket में 3 that by notification they can specify categories of supply of goods or services or both where tax on reverse charge will be there. For example, now today on advocate services, on the legal services, there is a concept of a reverse charge. On works contract services, there is a concept of a reverse charge. What is reverse charge? Reverse charge is where the service receiver actually pays the tax. The service provider is not responsible for various reasons. They have been transferred to the service receiver. So, I think the government will actually announce who will be really covered. I think possibly the last item which we will be able to deal today, almost the second last, is the composition levy. There is going to be a composition levy. What is composition levy? I think this option has been given. This is optional for people up to 50 lakh turnover. The turnover has been prescribed not exceeding 50 lakhs, although the government in the law with the recommendation of the council, that is the GST council, they can increase this limit from 50 lakhs to rupees 1 crore also. So, up to 50 lakhs there is a composition levy. What is composition levy? In case you are a manufacturer, then the maximum tax which can be chargeable by you is 1%. In central GST, similar 1% in state GST. And in case you are a trader, then 0.5% is the maximum you will charge as central GST and 0.5% as the state GST. That means only 1% tax is payable, or in case of supplier, and in case of manufacturer 2%, and 2.5% plus 2.5%, that is 5%. In case of restaurants, I think they are also being covered in special category where they are supplying food, etc. So, I think they can also, restaurants and food supplier other than alcohol, I think they can charge 5% tax as composite levy. So, in case of composite levy, I think there are few, when I say word charge means it is their liability to pay to the government. They may not be able to charge from the customer. Suppose you are a small dealer, you are a small manufacturer, you are a small trader. This is not covered for service provider. Service providers are exempted only up to 20 lakhs. So, when you go up to 50 lakhs, you are a small trader or you are a small manufacturer. What is permitted to you? That you say, no, I don't want to get into 18% tax. I don't want to get into these formalities. I will pay simple tax from my side. I will not charge any tax. I will pay from my side, say 1% tax, 0.5% plus 0.5% as a trader, I will pay to the government. So, this 1% has to be paid by him. He cannot charge this 1% on his bill. Similarly, he will not get any input credit against this 1%. So, there is a double whammy. So, I think it is applicable only for all small shopkeepers who may not like to actually maintain proper records. They do not want to get into filing of GST return, compliances, professional fee and other things. They do not want to get into that hustle bustle. So, they adopt the compliance, this compounding levy of 1% in case of traders. This 1% is maximum. It could be lower also. The government may actually notify a lower rate. These are the maximum limits which they have. In case of manufacturer, it is going to be maximum 2%. In case of trader, it is going to be maximum 1%, but actual levy could be lower. So, you can be charged this levy, but this is not entitled to all those who are doing interstate sale. Interstate sale people are also prohibited. People who are actually undertaking supplying some services, they are also not covered in this compound levy. And people who are engaged in export, they are also actually not entitled to this kind of a levy. You are not engaged in making any supply of goods through an electronic commerce operator. Suppose you are selling your goods through electronic commerce operator, even then you are actually not covered by this scheme. You cannot really adopt for this scheme. If you are not manufacturer such goods has been notified with central government on recommendation of the council, then also the government can notify certain goods to which this levy will really not apply. Because I think they want to primarily cover all those luxury goods or do not want goods in this process. Now, such a service provider or such a good supplier who want to go for composition levy will not be able to collect, shall not collect any tax from the recipient on supplies made by him, nor shall he be entitled to any input credit. When I was introducing you to electronic commerce, and this is the last thing which I want to say now, before we go into the question answer session, as far as e-commerce is concerned, you know, there are large number of people who are providing digital services, digital data, and they charge you money. For example, Google, Mail, you have to pay them money. There are some of them might be here in India, some of them might not be in India. You may be drawing data, you may be drawing services, you may be doing whatever kind of thing. But I think all such cases are proposed to be covered by the GST law, whether they are present here or not. In case somebody is availing any service, that is, he is importing any service either through electronic commerce, most importantly, the people who are covered by digital commerce or electronic commerce, all of them have been covered. This net is going to be so wide that I am sure that even the satellite which is providing pictures here to India, and whatever cost, even if you are selling it elsewhere, it may, whether it will be subjected to income tax or not, there could be a big debate. But as far as GST concerned, the way the law has been worded, no benefit of double taxation avoidance agreement also, all those transactions will be covered by the GST. And not only that, they will be covered by GST. If they are not present here, they have been mandated to appoint a person who will be responsible for this payment. That means it is important for them to nominate a person. If there is any person who is collecting money on their behalf here, then all right, then that person will pay GST on their behalf. Otherwise, if no such person is there, then they have to nominate a person. When they provide this goods and services, the services, more particularly services, will be covered in this. I think goods cannot be supplied electronically. It can be supplied only through electronic commerce operator, that is a different activity. But when you are supplying through e-commerce, that means through digital media, anything, it may be coming on my mobile, it may be coming on my laptop, it may be coming on my computer, or maybe otherwise electronically, it may be coming through many devices. Whatever services are used digitally, the GST will be payable on that service, and the government has enabled this. I think we will conclude it here by our presentation, because we are nearing to the time. It is already 3:46, and I promised you that last 15 minutes will be for question answers.
Yeah.
So you can ask me,
Yes, sir.
Ms. Agarwal, what questions you have received?
A few questions we have, and since sir concluded the topic on e-commerce, one question related to e-commerce we have, that a person who is selling online, like example through Snapdeal or Amazon or Flipkart, does he need to get registered under GST?
Yes, it is mandatory for himself to get registered. I think the registration, even if he is below the taxable limit, that registration is mandatory for him. I did not deal with registration because enough time was not there, but it is mandatory for himself to get registered. Not only that, all e-commerce service provider, that platform provider like Snapdeal, etc., they will also be required to deduct tax collection at source. That tax collection at source, GST, a small amount they will collect at source from the person who is a supplier listed with them, because there is a very big apprehension, not only apprehension, there is a ground reality that a large number of suppliers today which were supplying through electronic commerce provider, the government is not getting any taxes out of them. Yes. Because many of them claim that their turnover is less than the taxable turnover, and every time they change names, sometime from in person A, person B, person C, very swiftly. So I think to cut that problem below the root, the government has provided that mandatory, if you want to sell through e-commerce service provider, then you have to definitely get yourself registered.
Okay. And then there are a few questions on the local levies, that if those would be subsumed under GST or not. So a person has asked if works contract tax would still continue under GST?
No, I think works contract tax is also defined in the definition of service, actually, the way it has been defined now. So it is part of the GST, there is no separate works contract tax. It is becoming part of GST law. So, and similarly, almost all levies which are presently, you see, all local levies will get subsumed, except that municipal corporations and local bodies have been entitled to levy entertainment tax. That and entertainment, I think entertainment related tax, I think that, but although the current entertainment tax which is being levied by state governments will get subsumed, but at the municipal corporation level, I think some kind of taxes they will allow.
Yeah, because somebody has asked that at municipal corporation level, professional tax and advertisement tax also is levied. So
normally professional tax is levied by the state government. I don't think professional tax, there is any discussion for subsuming this, because professional tax is more of a direct tax. It is actually not an indirect tax. It is levied on a professional. It is not levied on supply of goods or services. Even if you are employed somewhere, you are required to pay that professional tax. Although practically your company might be bearing it, but actually it is a tax on you personally. It is not an indirect tax.
Yeah. And similarly, if there is a logistics company, will they still be required to pay all the state tolls?
No, I think they have to go through the tolls, but the government, the way it is actually managing that system, of course, the detailed rules are yet to come. But the way the discussion is going on within the government with large logistic companies, it is very clear that this stopping on tolls has to go. How it will go, what kind of documentation, what kind of clearances they will carry, I think all that operational thing is happening. It will be done through electronically, and anybody, anywhere a squad want to check anywhere somebody may not be carrying goods without bill. I think all that will become possible. But he has to definitely carry certain authorization when he actually take my goods as a independent logistic supplier. But he should not be stopped at the, I think that is the commitment.
Can you explain a little bit about the anti-profiteering clause under GST?
I think anti-profiteering, I actually explained when I was doing my session. I tried to explain to you that, for example, you have got, earlier you are not getting full credit of excise duty, and you start getting benefit now of excise duty now, and your cost of goods go down, and ultimately your input credit, based on your input credit, the cost which was there, it goes down. So the government of India is expecting, I think, of course, how the government will actually implement it is a very big question. And I feel it will be very difficult for the government to really keep track of what was the cost earlier, what is the cost now, how much is the differential, and whether the differential is being passed on or not. But I think the way the government has worded the anti-profiteering clauses, that in case your cost get reduced because the input credit which you are getting, which you were not getting earlier, you should pass it on to the consumer. And if you don't pass on, the government will recover it from you.
And what will be the impact on securitization transactions?
You see, securitization transactions will be part of because the way securities have been defined, they will be called securities under Securities Contract Act. So securitization, all kind of pass-through PTCs as well as all kind of securitization is subject to, they are all called securities. So long as they are covered in the definition of securities, they will not be covered in the GST.
Okay. And also, sir, is there any limit right now prescribed for audit?
Audit limit, I think, I don't exactly remember, 1 crore I think was being talked about. All turnover about 1 crore will be taxed, I think that detailing will come as we go further, because these limits will keep on changing. There is still debate going on what should be the limit, I think, but 1 crore is the tentative thing which is being thought about.
So, and also somebody has asked if they're opening up a new organization now, so they should take registration just for GST and under nothing else. There would be no registration under anything else.
I think that point will come when 1st July the day comes, when all the states really pass it, and because I think that day is still 3 months away. So I think we are all keeping our fingers crossed that untoward, unseen things do not come take it away a little bit more further, because then the whole country is waiting. There are going to be teething troubles. I am sure there are going to be teething troubles.
Under GST, suppose there's a petroleum pipeline company. They're engaged in the transportation of petroleum products through underground pipeline. Would that be covered under GST?
I think the transportation, petroleum is not covered,
Yeah.
But transportation services is definitely services. I think we have to distinguish between two. If you are actually providing, if you are a company which is providing transportation services, you are transporting goods, the petrol or gas or anything, that pipelines have been laid, and for that you are charging to the customer, then obviously you will be charged, you are subject to goods and services tax. It is only petroleum products which are excluded, not anything which touches petrol. That way even car tomorrow somebody can say is also using petrol, so it should not be covered under the GST. So I think all that will be covered. So all that services in my view will be covered.
And is there any limit for professionals to get registered under GST, that your threshold has to cross this much?
No,
is
I
there
think
a separate limit
no, there is no separate. There is no separate limit for service providers and the goods. There is no separate limit. Same limit of 20 lakhs is there. Below 20 lakhs, you need not register. But I think through this August forum, I like to say it is so important to register. And those who don't register, they don't really understand what they are losing. I remember when this law of service tax came, and there were a lot of hue and cry, why only on us? Why only chartered accountants, company secretaries, cost accountant, this levy has come? We should not really be paying, lawyers are not paying, why should we pay? Then somebody, I think one of our past presidents said one very important thing, that if you pay this tax, you will learn this tax. Unless you register yourself, you will not learn this tax that much. And once you learn this, you will be able to provide service also to hundreds others. Your cost will really be taken care of by that. Not only this particular item, but I'll also like to say that the input credit you are losing if you are not registering.
Yes,
and sometimes, and it is very important in today's network, the way Modi ji is saying and the way Finance Minister and the government is saying, that let us bring back the entire turnover into the books. So try, and I'll request all my learned colleagues, let us do all billing in books. Let us encourage all our customers, clients, everybody, all traders, manufacturer service providers, that they should bill fully and avail the benefit of input credit. I think they will be their growth will be very, very different.
And so then again something related to registration only, that if a person has different offices in different cities, so it is necessary for him to migrate each registration?
No, you see how it is happening is, in one state you can have one registration. For example, suppose you are in the city as I explained you, also suppose you are in Maharashtra and you have you are in Mumbai also, you are in Nagpur also, you are in another place, Pune also. Suppose you are at 3 locations. You have been given full liberty to obtain only one registration. So you should obtain one registration in one state for the even if you are at different locations. And currently, if you have different registrations, then you can always get only one registration. But one option which they are given, suppose Pune you have a steel factory and you have a textile factory in Nagpur, or vice versa, then you can always opt for business segment being different, separate business vertical, you can always obtain a different registration. But I think my advice will be that I think whatever may be, a single registration will be very helpful, because input adjustment will become very easy in single registration. I think I have also not explained the concept of input service distributor. I think as the new sessions will come, they will really happen. All the service providers might be really feeling that pinch that you are providing services outside your town where you are there. What will happen? Whether you will be required to take so many registrations. Suppose you are supplying services in Tamil Nadu also, in Karnataka also, in Mumbai also. So I think so long as you are supplying services from one place of business, you are not having any fixed place of business there, you are going only for providing the service, a part of the service, and then rest of the service normally you do it sitting on your own computers from your own office. It is the visits are very less normally, that is what we have seen. In that case there is no big challenge. But if in case your branches are there, your business is such that the branches are required, then separate registration will be required. Still even now the government is actually struggling with and I think at the highest level an effort is going on to find out some methodology of some benefit. For example, banks, like for example State Bank of India will have about 18,000-19,000 branches. So I think they will practically be required to be covered in all the states. Similarly, telecom companies. The challenge is not registration. The challenge is when you actually there is a cross use of services and goods. For example, suppose you are a Delhi based company secretary, you have a branch in Mumbai, another branch you have in Chennai. Suppose at 3 places, and you provide services to somebody in Hyderabad, and some services being provided by a person in Chennai, somebody from Tamil Nadu, somebody from Delhi, and the billing is done by whom? Who should make the billing? That question arises. How you will share the revenue between the 3 branches? Who will charge GST? I think all these issues becomes important. That's why 3 separate registrations might become very necessary. Even now I think people like us who have multiple branches, we have separate services registration at separate locations, because it becomes very easy for do compliance locally. And I think for the same state, within same state you can have of course one single registration. Every state, I wish all the good luck to all my company secretary friends to have multiple offices, maybe in all the 29 states. Let them have 29 registrations. They will have hundreds and thousands of clients everywhere. I think that will take care of their cost.
So friends, I hope we answered all your queries and hope you benefited from the session. We thank sir for taking out his valuable time and giving us such a detailed insight about the basics of GST and some other areas. So
before you close, I want to make a small message. I think we have 1 more minute in hand. I like to give one very important message to my friends who are company secretaries or students or maybe other people who are watching, more important to our company secretaries friends, that this is a very big opportunity. And it is important not to lose this opportunity. It's a new law which has come and scope is phenomenal. I think I am told my colleagues who are professionals, even in VAT law, per client they have been charging 15,000, 20,000 rupees per client also as service fee, because tremendous amount of service will be required. I think if that is the kind of scale of fee which you are going to get, even if you have 100 clients, you can see how much money is really walking into you every month. So if you work hard and use technology, understand this law, take the aid of technology, have a large setup, maybe within the same state, maybe only on single location, and start providing services. Understand this law, niceties of this law. This law will have so many interpretation. Somebody said there will be less litigation. Litigations are bound to happen because Indian minds are Indian minds. I think interpretations, the government will want to interpret you this way, you will interpret the other way. While reading the law today also, I found 5, 6, 7 places where there is a lot of saving possible. I am not sharing it with people right now. Let the law settle down. I think we will share the planning issues also, how to save money, how to pay taxes less, at the same time be within the 4 corners of law. So I think that all we will understand as we go further. That is the role of professionals ultimately. So any one of you who wants to actually understand this law, kindly call up the Company Secretary Institute. You can call up at any time me, Vinod Jain, ca@gmail.com, or on my mobile number. Anytime to professional chartered accountant or company secretaries or other professionals, free of cost. This service 24/7 is available from the institute and also from all of us who are part of the institute. Thank you so much.
So friends, stay tuned for the topic of concepts of supply next Thursday at the same time and at the same link. Thank you.
Thank you so much. Thanks for inviting me.